Well, let's delve into the local markets right now. We've got Chris Gilmour, investment analyst at Absa Investments, joining me at the desk. Chris, thanks for joining us today. Just looking at Richemont, as I was saying, it seems the market disappointed. Sales up 5% year on year, October to December. And just looking at the forecast, 7.6%. So the stock price coming back 6% on the day. An overdone movement, do you think?
I think so. Look, this is a very skittish market in the sense that had we had different economic circumstances, if we were looking at a global economy that was really forging ahead nicely, I don't think the analysts and the other commentators would be that concerned about this narrow miss. But I think now any company that's had such a rise as Richemont has, like last 63% up last year, and the retailers last week, any company that's sitting poised or priced for perfection, I think if they don't make their targets, then they're going to get punished, and punished very, very badly indeed. But I think it's overdone because at the end of the day, companies we're talking about, Richemont and the retailers, and many of the retailers last week, they're quality companies and their earnings are there. It's not as if we're talking about companies that are marginal when it comes to earnings, far from it. So I think sanity will prevail, it will get back in, but I think we need to get a market that's a calmer type of market, a less skittish type of market, and which will be able to actually come to terms with it with these kind of results.
It certainly is an interesting overall market to look at, the luxury goods space, because just looking at some of the numbers we saw from last year, Prada, their sales were up 36% in the first half of 2012 as a result of Asian growth. And then you had Burberry, where sales were down during the slowdown, and then a nice recovery in the last 3 months of last year as a result of the Asia Pacific region. And I mean, it's really hard to forecast overall how the Chinese market will kind of respond to luxury goods players. It seems that they're having a mixed response to goods coming into the market there.
Yes, they are. Look, there are a couple of technical factors in here as well. Let's not forget that the Chinese New Year is about 2 weeks different to what it was this time last year. So that delays spending as far as that concerned. And that's a big factor whenever the Chinese New Year kicks in. Swiss watch exports still very, very buoyant indeed. So that's why I say, you know, the wealthy out there are getting wealthier and they're spending money. They're really not that concerned about what's going on at the periphery, the margin, if you like. So I'm not concerned about this at all. It's a marginal miss on the Chinese side particularly, and you're still talking about a really high quality company. So I think to smack it back 6%, it wouldn't surprise me to see a bit of a rebound taking place during the course of the week.
Let's talk about the iron ore space, because a report coming through that South Africa, now the third largest supplier of iron ore to China, overtaking India as a key supplier to the Chinese market. And overall, if you're buying into the Chinese recovery, you're looking at South African iron ore producers benefiting from that. What are your thoughts on the investment case for the likes of Kumba Iron Ore, that of course is a single commodity producer?
Yeah, and I think you've hit the nail on the head. It's a single commodity producer. I feel much more comfortable with diversified miners because you're diversifying away to a certain extent your risk. Having said that, I remember on this program, in fact, a couple of years ago, some people saying we're going to get a lot of new capacity coming on stream in iron ore all around the world. And that doesn't augur well for the likes of Kumba. It's not there yet, but we're getting closer and closer to it. So when all of that starts kicking in, notably from places like Australia, for example, and the Far East, it's going to have a dampening impact on Kumba. So Kumba must make hay while the sun shines, but yeah, and hopefully the Chinese demand situation will continue to hold up, which it looks like it's doing at this point in time.
Yeah. Now, Mark Husvani, of course, moving across to Anglo-American, and just coming from the Anglo Gold Ashanti side, saying today that South Africa could become a major resource producer, and very optimistic, as always, on the potential for South Africa. I mean, do you think he's being slightly too optimistic, or do you think we have reason to be positive about comments he makes?
Oh no, he's spot on. And let's not forget that we have the biggest and the most diversified range of resources of any country in the world. We've got, at a conservative estimate, between 2.5 and 3 trillion rands worth of metals and minerals under the ground in situ. So the question is, how do you get it out efficiently and get it to the desired location efficiently? And that's really what it revolves around. But Mark Husvani is quite right. And look, he obviously has a vested interest in saying things like that, but I don't think he's talking to his book. It's a very genuine comment. But I think if we get hidebound with politics and bureaucracy, it's going to make it more difficult to actually fully exploit those resources.
Interesting report also coming through today, just citing the fact that you've had Rio Tinto coming through with their results and that massive $14 billion write-down of some of their assets, and highlighting the fact that when we see results coming through from the likes of Vale, BHP Billiton, and of course Anglo American, you could see the same type of write-downs, a lot of underperforming assets also in their portfolios. That of course would be another risk factor when it comes to investors right now.
Yeah. Well, we've got Anglo coming out in about 2-3 weeks' time, and Minas Rio probably isn't going to look very nice, and we're going to see a halving of earnings. That's on the basis of our estimates at this point in time. So yes, we're going to be looking very closely for that type of thing. Look, I
mean, how do you know whether that's baked in or not? I suppose
exactly.
Market reaction on the day could exaggerate that.
Quite right. Rio Tinto was perhaps a special case in the sense that, they paid $38 billion for Alcan. Back at the start of the global financial crisis. So I think to a certain extent they got caught by events they couldn't really forecast at all. So
in the same way that Anglo American perhaps has also.
Yeah, Anglo has been trying feverishly for many years to try and change its stance away from precious metals to more base metals and minerals. And of course some people have said that they've overpaid for certain of their assets. So a write-down may well be in the offing. So I think the one company, in my opinion at least, that comes shining through all of this is BHP Billiton, because from inception it was a company that knew exactly where it was going and as far as its target was concerned.
And of course also highlighting the fact that BHP Billiton's write-downs more than half of what we've seen from the likes of Rio Tinto in the past 6 years. But thank you so much for joining us today. Chris Gilmour, investment analyst coming through from Absa Investments.